Hey everyone, and welcome back. We're diving into a real mix today. Got market trends, we've got global happenings, even a little bit about college degrees and how much they're actually worth. So buckle up, get ready to decode these headlines, figure out what it all means for you.
You're not kidding. Lots to cover today. Some of this, honestly, even caught me off guard a bit.
Well, speaking of caught off guard, EQAI made a move this morning, sold off a slowdown stock, and ended up with an 18% gain. I can already hear some of you asking, what's that even mean?
Right. So slowdown stocks, those are companies that actually do well when the economy kind of takes a dip. Think your utility, things people always need, consumer staples, your toilet paper, toothpaste, that kind of thing. Not the most exciting stuff, but it keeps the lights on, right?
Makes sense.
So EQAI deciding to sell, that tells me they might be sensing a shift. Like maybe it's time to back sectors that are ready to grow, not just ride out the storm. What that says to me, and maybe what you should think about, is if your portfolio's got a good mix, maybe some of those growth companies are worth a look right now.
Interesting. It's like they're sending up a signal flare or something with that move. And on that note, economic indicators, we got to talk about them. The U.S. trade deficit is actually shrinking down to a 5-month low. Fewer oil and car imports seem to be doing the trick.
Okay, so two things are good about that. One, obviously helps shrink that trade deficit you were talking about, but bigger picture, it could mean things are picking up here in the U.S., domestic production ramping up. That could be good news for GDP growth in Q3. Plus, U.S. exports, they're at record highs. So American companies, they're making moves globally, that's for sure.
Now that is something to feel good about. All right, let's switch gears a bit. We were talking Wall Street, but things are a bit more tense, let's say, over in the energy market. Oil prices, Brent crude dipped below $80 a barrel. Briefing saying this is directly tied to all that tension between Israel and Iran, especially after that missile attack.
Yeah, and this is one of those situations where the fallout, it could be wide-reaching. Everyone's watching how Israel responds. Energy market, definitely on edge. Any escalation, any disruption to the oil supply, prices are going to climb. But flip side, let's say diplomacy wins out, we could see those prices stabilize, maybe even drop further. It's like a real-time example of global politics directly hitting your wallet.
Talk about a ripple effect. And speaking of ripple effects, let's talk tech. Microsoft got hit with a surprise downgrade from Oppenheimer. And this isn't just any tech company, right? This is Microsoft. They're kind of leading the charge when it comes to AI. So what's the deal there?
Right, and remember all that hype. AI, it was supposed to be this money-making machine. Well, Oppenheimer's waving a little red flag here. OpenAI, they're losing money. And Oppenheimer's saying, hey, that could end up hurting Microsoft's bottom line. Seems like making cutting-edge tech, which, let's be real, it's expensive stuff, making that work within a company that's already huge, it's trickier than some people thought.
A reality check for anyone who thought AI was a guaranteed gold mine. And while we're talking reality checks, this next one might hit a little closer to home for some folks. Briefing highlighted a study, and it's about the 10 least valuable college degrees, at least when it comes to how much money you make. Only one major on that whole list had an average salary above $50,000. So for those of us who didn't major in, petroleum engineering or something, are we doomed?
It's definitely something to think about, but let's add some nuance here, okay? Earning potential, it's important, but it's not the whole story. College, whatever you study, it gives you critical thinking skills, problem solving, a broader perspective. Those are valuable no matter what you end up doing.
Exactly. It's about way more than just the paycheck, for sure.
100%. That being said, though, for a lot of people, figuring out how your passions line up with a job that, actually exists and pays a living wage, that's important. Finding that balance where you can do what you love without, worrying about money constantly, that's the sweet spot.
No argument there. All right, let's jump over to China for a sec. Seems like that post-holiday stock market rally kind of fizzled out pretty fast.
Yeah, didn't quite keep up the momentum, did it? See, that initial surge, that was all about, people were expecting the government to step in with some big economic stimulus, which, spoiler alert, hasn't happened yet. So some analysts, they're starting to think that China's recovery, it might be a bumpier road than we thought.
And considering how connected everything is globally, any bumps in their road, that could spell trouble for all of us, right?
That's exactly it. You got to keep an eye on what's happening globally, especially if you're investing. It matters.
Speaking of keeping an eye on things, Briefing had a little warning for anyone getting close to retirement. Apparently some financial advisors, they might be amazing at helping you grow your savings, but when it comes to things like Social Security, and this is a mouthful, drawdown strategies, they're a little out of their depth.
Yeah, and that's a big one. People don't always think about that. Drawdown strategies, basically, it's the plan for how you're going to actually spend your retirement money, right?
Yeah.
Make it last, all that. But it gets tricky because how you take that money out, it affects your taxes, maybe even some of your benefits. It's complicated.
Okay, so what's a soon-to-be retiree got to do? How do you find an advisor who's got the whole picture figured out?
Don't be afraid to ask the tough questions right off the bat. Before you sign anything, make sure they actually know this stuff, the ins and outs of retirement income. Social Security, can they help you squeeze every last dollar out of that? What about different drawdown strategies? Do they understand how those play out in different markets, good or bad? These are important conversations to have.
I mean, it's your money. You worked hard for it. All right, before we wrap up, let's take a step back, look at the stock market as a whole for a minute. Briefing made an interesting comparison. They're saying the market is better at helping you hold on to wealth rather than building it from scratch. They even brought up that Forbes 400 list, the richest people, saying most of them, they didn't get there just from playing the stock market.
It's a good point. Makes you think about the whole wealth creation versus wealth preservation thing. Stock market, yeah, it can grow your money over time, long term, but it's not some get-rich-quick scheme.
No magic shortcuts, huh?
Nope, definitely not. It takes time. You got to be disciplined. And honestly, a lot of times it's about having your money in different places. Real estate, maybe you start a business, or hey, maybe you inherit some money. That Forbes list, it just shows you there's a lot of ways to end up wealthy. It's like they say, don't put all your eggs in one basket.
So it's more about playing the long game, being smart and not expecting to, win the lottery or something.
Exactly. And this actually ties in with something the St. Louis Fed President Musalem said recently. He's all about this gradual, careful approach to interest rate cuts, which that kind of fits with this whole idea of slow and steady growth, doesn't it?
Interesting. So even the people in charge of all that, they're not trying to make any sudden moves, rock the boat or anything.
Right. They want to steer things in a good direction, not cause more chaos.
Makes you think twice about hitting that panic button, right? All right, for a little Wall Street chatter, it looks like Jim Cramer's feeling good about Netflix. This is even with those downgrades from Barclays and Piper Sandler, kind of interesting. He's also brushing off those Amazon and Apple downgrades, basically saying, don't worry about it.
Yeah.
So what do you think? Is he right on the money or just stirring the pot?
Well, Cramer's never been afraid to make a bold statement, has he?
That's for sure.
But I'll give him this. He does touch on something really important. Don't freak out every time the market does something weird. Those fundamentals he mentioned, how much a company's actually making, who's running the show, where they stand in the market, those things matter long term. And one little downgrade, that's not going to change those overnight.
Right, makes sense. Easier said than done, though, when you're watching your stocks go down. Speaking of down, Mobileye stock, it's down a whopping 70% this year. Ouch. And JP Morgan saying, brace yourselves, it's going to get worse. So what's going on with all these self-driving cars? Why is it so hard to predict what's going to happen?
It just goes to show you how wild these new tech sectors can be, right? Self-driving cars, that whole technology, it's changing so fast. Huge potential there for sure, but also a lot of risk. No one knows for sure who's going to come out on top. Investors are placing bets, basically, and that means those stock prices, they're going to bounce all over the place.
High-stakes guessing game, for sure. Okay, last thing for today. Let's talk about how we're all spending money. Briefing says credit card debt in the U.S., it's actually gone down. This is twice now in the last 3 months. Does that mean we're all tightening our belts, or is something else going on?
Now, that's an interesting one, isn't it? Could be people are being a little more careful with their spending, with the economy kind of shaky and all. Or maybe it's how we're paying for things now. Debit cards, those online payment systems, maybe those are taking over. Too soon to tell for sure, but definitely something to keep an eye on.
Always good to stay informed. On a lighter note, though, can you believe it? The bull market's about to turn 2 years old. I don't think anyone thought it would last this long with all the craziness going on.
It's definitely been resilient, surprised a lot of people, but gotta acknowledge there are still some potential problems out there. Those global tensions we talked about, inflation, something unexpected could always happen. It's not all smooth sailing from here, that's for sure.
So a little bit of optimism, but stay cautious. Seems like good advice for pretty much everything these days. And with that, folks, that wraps up our deep dive into the markets and beyond for today. We covered a lot: oil prices, tech getting shaken up, that bull market just chugging along. But remember, knowing what's going on, that's the key to making good decisions, whatever's happening in the world. So keep asking those smart questions, be curious, and we'll be back soon to break it all down again. Until then, keep learning, keep growing, and we'll see you next time.